Futures trading involves substantial risk of loss and may not be suitable for all investors. Good afternoon. This is Oliver Sloup, Blue Line Futures, coming to you from the suburbs of Chicago. Today is Friday, October 10th, and it was an exciting day really across the market. We're still open, so it still is an exciting day outside of the grain and livestock markets, which just closed down. Headlines this morning with regards to trade in China, straight from President Trump on his social media platform, Truth Social, stating that there may not be any need to meet with China in 2 weeks and potentially calculating increased tariffs. So a big risk-off trade. Before we get into that, I do want to remind you, if you've not signed up for a free trial of our daily commodity commentary, head over to bluelinefutures.com. From there, you can select the markets that most interest you, whether that be grains and livestock, precious metals, energies, indices, etc. We've got a great team that puts out that information each and every day, and then the trade desk here ready, willing, and able to help if needed. Now that we got that plug out of the way, we can see this NASDAQ chart here today. Big red day, a lot of liquidation in this market, breaking and closing below, or what appears to be a closing below the 20-day moving average for the first time in what seems like a lifetime, ahead of the weekend where there may be a little bit of uncertainty. What does this mean for some of the other markets? Gold and silver has obviously been on a big tear here recently, and I think the bull trend still remains intact for these markets. But talking with clients throughout today's trading day, I just want to emphasize that if we do continue to see a liquidation event in the outside markets, the equity markets, that could potentially spur into selling in silver and gold. So that's going to be something to be cognizant of as we roll into the weekend and start next week's trade. If we see a risk-off trade, gold and silver don't necessarily have to be a safe haven. You could see liquidation in that market as well. So just something to be aware of. And then crude oil really took it on the chin. This is a market that we've tried to be optimistic on here, as it's been able to hold $61 to $62 for the better part of the year. But a failure here clearly triggered some technical selling, and now it looks like there is some air underneath the market down near 54 and 55. So that friendly bias that we have had has been neutralized, and now we'll just wait and let the dust settle, see if we can't get a little bit better price action to look back to the upside. Bears in the driver's seat into the weekend in that market as well. Speaking of bears in the driver's seat, that is where they are in the grain markets heading into the weekend as well. Failure against the 20 and 100-day moving averages here in corn this week led to pressure yesterday. And then today's headline, just too much to overcome for the market. So we broke and closed below the 50-day moving average for the first time in a while, which really opens the door for additional downward pressure, potentially towards that technically and psychologically significant $4 level. Now, I guess the caveat is, if we come back into next week, the market digested this information, we're able to kind of maintain price action above the 50-day moving average, potentially that can neutralize some of the damage that was done today. So next week, going to be a big week for the corn market, and same for the soybeans, obviously. The rejection against the cluster of major moving averages earlier in the week, and then again, you got the headline from President Trump taking us back basically where we were before we got the positive trade headline just about a week ago. So back to square one, down on the week across the board in grains, corn, soybeans, and wheat. Wheat was, again, the anchor to the downside there. Then I guess wrapping things up, we'll touch on the livestock markets. We broke out above the 20-day moving average earlier in the week. Tested trendline resistance the past couple of sessions. It looked like we were going to fail there earlier in today's trade, but broke out above there. And as you can see, that accelerated the buying and took us to a new closing weekly high for the bulls into the weekend. This despite kind of a lackluster cash trade so far. Feeder cattle continuing to rip higher today as well. The November contract settled the session up about $1.85, which extended gains for the week to nearly $21, or about 6%. So big moves in the cattle complex as they have shrugged off the risk-off trade in the outside markets. It'll be interesting to see how that shapes up going into next week. So it should be a good week next week. A lot of volatility, a lot of great opportunities across a lot of different markets. If you have any questions at all, our trade desk is ready, willing, and able to help. So don't hesitate to reach out. And again, trading futures involves substantial risk of loss and is not suitable for all investors.